Citi's Stuart Kaiser is getting ready for another key earnings period for AI. He's the firm's head of equity trading strategy. Stuart, great to see you. We were not joking, but we actually posed a question last night, or I posed a question to these guys. What is more important, rates and the direction of rates, or Nvidia's report on May 22nd? So what's your answer?
Well, markets are pricing them about the same, actually. If you look at S&P 500 earnings, the Nvidia earnings day is priced as big an event as CPI, the FOMC, or payrolls. So the market's kind of with you on this one. I think for equities, frankly, I think Nvidia might be a little more important at this point, just to kind of confirm the earnings trend we've seen. With rates, to me, it's about rate of change. I mean, if you put 10-year rate at 4.75 and it got pinned there, I think equities can do fine in that environment. If you had a big miss on Nvidia earnings, I think that kind of eats away that momentum trade, probably a little bit more risk for the markets there.
So it's interesting. I think it's rates, but that's what makes markets, as they say. But was that flush we just saw in Nvidia a couple weeks ago? I think it got down to 735, 740. I mean, it retraced the entire thing. Was that it, or is there? You still anticipate a lot of? I'm not playing stock market, but a lot of volatility in this single stock.
Look, it's priced for about a 10% move on earnings. I think to your point, and it kind of speaks to earnings season, early earnings season, you had that Taiwan Semi report, you had that ASML report, you had that Netflix report. All those stocks were down double digits. And that got our attention big time, going into TMT earnings. The view was, geez, if those stocks put up okay-ish numbers and are down double digits, what could the rest of this earnings season look like? Big tech delivered and sort of stabilized things. But I think it kind of puts into context how important Nvidia is for the market. It's being priced as a macro risk, not a single stock risk. And based on how those other stocks reacted to earnings, it's still incredibly important, I think.
But Stuart, if you look at mega cap tech in the form of at least the NASDAQ 100, relative to the S&P, it looks like it made a high in mid-January. Actually, it really made a high back in July and has kind of gone sideways. But there's a bit of a downtrend. So looking for leadership that has come from the mega cap tech stocks, is that concerning to you? And semis have kind of held in. They've kind of, they've at least held serve. And as we've said, Nvidia is critical. But NASDAQ 100 underperforming the S&P from January in a down channel. And that concerns, I think, leadership.
Yeah, look, the leadership has got a little more fragmented this year. Mag 7 was 70% of market cap gains last year. Right now, it's probably in the 50% range. Even within that Mag 7, you have, Tesla not performing as well, Meta, So even within that 7, you've had a little bit of lower correlation. So without a doubt, it's in focus. As Stan was talking about with semis, and you mentioned, semis is key here because you don't know where these AI revenues are going to end up getting distributed and over what time period. So people are investing in the pipes, which in their view is semis and potentially power generation. So I think for the near-term risk-reward, it's those stocks that are probably more important. We are seeing a lot more focus, though, in AI-focused software, for instance, as potentially kind of that next leg. So to your point on semis and Qs, once valuation gets to a certain level, people start looking for what we would call AI adjacent. Yeah. And you're looking for, what also benefits from this might not be fully priced. But I think for that adjacency to work, Nvidia has to keep working, right? That gives you the bravery to take that extra step.
So I don't want to quibble with you, but let's say Nvidia misses because they just can't produce enough. So the demand is still there, but the revenue is a little light for whatever reason. Not that they are not having the demand. They have more demand than they can fill. Does that change your perspective about Nvidia's importance to the market?
Well, I think that's your best case miss, right?
Right?
We miss because there's too much demand for our stuff. But I think Taiwan Semi kind of came under a similar type of pressure where they were having trouble kind of meeting demand as well. So, there's also talk of, NVIDIA's next-gen chip comes out later this year. What is that going to do to kind of the demand profile over the balance of the year? So, yeah, there is a certain case where they might miss numbers, but they might have really good reasons for it. I still think the initial reaction is going to be a little bit risked off just because you're adding uncertainty. But, yeah, big picture, if they miss because they just can't keep up with demand, that is much better than, obviously, the alternative would be. I agree with you 100%.